This is not looking good for Tesla stock. It just triggered a very powerful bearish reversal chart pattern and it is losing its key support levels as well. The trend is now bearish, but what to expect from here? In this video, we'll talk about price action. We are going to analyze Tesla stock and compare it to the indices and of course take a look at options. This video is going to be interesting, so stay with me. My name is Nathan and I welcome you to the Finance Hydra channel. Let's start our technical analysis on Tesla stock looking at the 1 hour chart. In the 1 hour chart, Tesla failed miserably in reversing the bearish bias over here. We see a crystal clear triple support level, resistance level right now made by this purple trend line over here connecting the previous top levels on Tesla made by the 21 EMA and by the 187, our previous support level over here that did work as a support 1, 2, 3 times in the past. What's more, the 187 is the neckline of this head and shoulders chart pattern in the daily chart, which we're gonna talk about in a few minutes. Back to the 1 hour chart, the trend is clearly bearish because Tesla is doing nothing but lower highs, lower lows. In fact, today, since we lost the previous support level, we are just resuming the bearish bias, and today we did trigger a micro bearish pivot point, another micro bearish pivot point again, indicating that yes, now Tesla is supposed to seek lower levels. In the daily chart, we lost the neckline over here at 187, this neckline of this head and shoulders chart pattern. What's more, we lost the 21 EMA in the daily chart as well. In addition, we did a minor bearish pivot point over here, a minor lower high, lower low. So everything is pointing towards a sharper correction, and so far there's not a single bullish reaction on Tesla indicating that it could find a support level over here. Now, if Tesla is about to find a support level, maybe tomorrow, maybe next Monday, the timing couldn't be better because Tesla is very close to its 38.2% Fibonacci's retracement in the daily chart. What's more, if we think outside our little box over here and take a look at the indices, the S&P just hit its main support level at 39.49. We are slightly under this support right now, but it could react. Any reaction over here might indicate that the S&P is going to bounce to its resistance level again, which is around this purple trend line up here, around the 4K. All right, this is a very important resistance level on the S&P index, and any bullish reaction in this area might indicate a bottom level over here, might reinforce a bottom level, and the S&P could easily seek its resistance level over here. The Nasdaq index is trading around its 21 EMA. In fact, we are dancing around our EMA over here. Again, any bullish reaction around this EMA might indicate that we are going to try to retest the next resistance level again, which is around 12.4K, this purple line over here. What's the problem? The problem is that we don't see any bullish reaction on Tesla, on the S&P, on the Nasdaq, the Dow Jones index. The Dow Jones is in a very curious support level over here. This black line around 32.5K did work as a support level multiple times since December last year. We hit over here 1, 2, 3, 4, 5, 6, 7 times, and right now we are trying to lose this support level. If the Dow Jones actually loses this support level, along with the Nasdaq index losing its 21 EMA and the S&P losing the 39.49, then okay, the market will just re-engage its bearish sentiment and we are going to just seek lower levels, indicating that in this scenario, Tesla is going to retest the next Fibonacci's retracement at the 50%, maybe. Of course, ideally, the next support level on Tesla is this gap area, which is at the 61.8% Fibonacci's retracement at 146. This is the most interesting key support level on Tesla right now, because it is a very important Fibonacci's retracement. It is this gap area over here after earnings. So in my humble opinion, 146 is a very important support level. And if the indices fail in reacting above their critical support levels, this is where I see Tesla heading to in the next couple of days. Of course, the sentiment is quite weird. Let's take a look at options over here right now. Options wise, we see a huge wall of calls over here around $200. The maximum pain is at 190 for options expiring this Friday, March 10. So we are way below the maximum pain. So it feels like the bears are trying to squeeze the bulls in this scenario. However, the sentiment is still quite optimistic because the put-call ratio here on the right corner is at 0.72. So still, it feels like investors are optimistic in a certain degree, but we are extremely cautious as well. We see the volume on puts at 180 exploding right now today, and this is quite interesting because the 180, if we take a look back at those charts, the 180 is a nice support level that did work as a resistance level in the past over here 1, 2, 3 times, and this area seems to be quite relevant. So seeing puts at 1.8 is indeed quite symbolic for Tesla. Now that we are losing the 1.8, it feels like the bears are really trying very hard to squeeze the bulls in this scenario. In theory, the next support level is the first support level after the breakout of this head and shoulders is the 38.2% Fibonacci's retracement at 173, 172. Maybe Tesla is gonna hit there, maybe, but any bullish reaction above this support level might indicate that Tesla could bounce again to higher levels. I'm not saying that Tesla is going to reverse the bearish sentiment, but it could trigger a dead cat bounce to the next resistance level, which is around 187, around the 21 EMA in the daily chart over here. Now, if we take a look at Tesla fundamentally speaking, we see that its valuation is still quite expensive, but it is getting cheaper. Tesla's fair value, according to Simply Wall Street, is at 160 over here. If you want to learn a little bit more about how Simply Wall Street calculates Tesla's fair value, check this box over here. They show exactly how they calculate their formula, so I really advise you, if you want to study a little bit more about fundamental analysis, check Simply Wall Street. And here, if you take a look at Tesla's financial health, it is still phenomenal. Tesla has a very low debt to equity ratio. It has way more cash than debt. It is still a very solid company. Tesla as a company is very good, is very strong, is very resilient, but price action wise, it is facing some problems in the short and mid-term as well. And for premium analysis, model portfolios, and options trading, check my website. The link is in the description. Now let's take a look at Tesla's weekly chart, because in the weekly chart, this is quite important. In the weekly chart, we are losing the support at 38.2% Fibonacci's retracement. In order for Tesla to avoid a sharper continuation of this bearish sentiment, we gotta do a very strong reaction next week, preferably closing above this retracement over here, above 184, which is very close to the to the resistance area over here in the daily chart. So if you are bullish on Tesla, if you believe Tesla is going to recover, it is very important for you to watch this resistance area. Tesla must break this area over here in order to trigger a bullish reversal, at least in the weekly chart, indicating that it could seek the $214, the $210 again. So let's keep monitoring these prices, these key points. Of course, I'm gonna keep you guys updated every single day on this channel. So subscribe to this channel if you're new around here, if you are not my subscriber, because you're going to miss my future videos if you don't. And of course, click on the like button to support me. It is free. Thank you very much for your audience, my dear friends. Stay safe. Bye.